Well, the thesis is around a whole bunch of technologies that are all coming together at the same time, whether it's artificial intelligence, robotics, EVs, green energy, genetic sciences, all of these things, plus crypto. And these things are all driven by what's known as network effects. So network effect business models, for people who aren't familiar, think of Facebook and think of what happened to the share price of Facebook. And that's because as more people join the network and then build businesses or interconnect on the network becomes more valuable. And it's different to the discounted cash flow model of the world that we all grew up with. It's a network model of the world, and it actually works really well. These charts all look ridiculous and everything looks like a bubble until you put them into a logarithmic chart, and they all form these beautiful trends with higher volatility, but absolutely phenomenal returns. And what that's all about is the future value of the network. So once you start, the first great network adoption model that most of us grew up with was the mobile phones. Mobile phones, when you had one or two mobile phones, they're pretty valueless. But once you start getting 1,000, 1,000,000, 10 million, 100 million, then the value of the network becomes exponential because suddenly you can do so much. And we've seen that, then the rise of smartphones and then the apps that get built on. And so if you were to add all the mobile phone networks around the world together, you've got, a multi tens of trillions of dollar asset here. But that's happening here, particularly with crypto, because this is the network of money and of digital value. So it's an incredibly powerful incentive, because if you remember the Facebook version, the users benefited by being able to connect with people and also getting the dopamine response of likes and all of that stuff. But that was all we got. The network got all the money. So Facebook shareholders got rich. The difference with things like crypto is the users are the owners. So if you own Bitcoin, you actually own a part of the network. So that's why it becomes incredibly powerful. So that's really what this is based on. So I started realizing that this was all a network effect business model. And I started modeling Bitcoin, and it worked by using the number of wallet addresses. Then I started modeling Ethereum, and it exactly fitted too. And Ethereum, the network's growing faster because we've got so many developments on top of the network, much less on Bitcoin. So we've got a huge growth in the network of new people joining it, and then all of the network connectiveness of these new businesses. And we've seen the rise of NFTs and the rise of DeFi, in the last year. And so it's working perfectly within this Metcalfe's law model. But then I started realizing, what I then realized is you start to see some other breakout tokens like Solana and, let's say, Terra. So I modeled those. They're also exactly following network adoption models. And then what's really spooky about it all is Ethereum is exactly following even time and price and chart pattern Bitcoin in 2017.
Wow.
But Solana is exactly following Ethereum 2017. And if you remember what Ethereum did last time around, because it's earlier in the network and the exponentiality is larger. So I'm starting to realize that the whole space is the same thing. And that is a key for us all to be able to understand how to value this stuff. What's real, what's not? It's simple. It's the network.
And what do you think is driving some of these values? Is it just pure price speculation? Is there value there? Is there interest? What is it that is bringing these folks into the various networks?
So we talked about Ethereum, which is rich and deep as an ecosystem. So everyone gets that. So why Solana? What's going on there? Well, Solana first was price speculation. And then suddenly applications start getting built. There's NFTs being built. There's DeFi being built. There's stuff going on. So if developers are moving onto the network because it's cheaper and faster than Ethereum, but slightly less decentralized, that's the trade-off. So you can see it in real time happening. You can really see that the value is being driven by the network adoption model, and that's super clear.
And so when you kind of develop that framework, are you able to now take that backwards and apply it also to stocks, or does it just work on crypto?
No, it works on stocks too, particularly these network adoption model exponential things. So EVs is a great example. You know, why did Tesla trade the way it did? Everybody screamed it's a bubble. Well, when you put it on a log chart, A, it doesn't look like a bubble. And B, it's following the network adoption model that it takes a while for people to adopt the technology. And then when they do, everybody comes. And now we're seeing Ford with its electric vehicles and, you know, the French car makers and now VW and Audi and everybody. And that cars are now becoming software products and SaaS platforms. They will have streaming money within them. So you'll automatically engage with smart cities. So we don't even know what cars are going to be in the future. But we're seeing that whole model apply to all of this. You know, whether we look at Shopify, which is basically AI, you know, those kind of businesses, they all fit the same model. We see the same model fitting out, like genetic sciences reached its tipping point over COVID because the vaccine rolled out, which had been worked on for 20 years.